Welcome back to Squawk Box. Rick Santelli here, live in Chicago, waiting the most important data, in my opinion, of the week. Initial jobless claims, 1.508 million, so 1,508,000. That, of course, is less than our last look, which is 1,542,000, and that got upgraded, unfortunately, to 1.566 million. So it is the 11th week in a row that jobless claims are down on the initial, and a week in arrears continuing claims, 20,544,000. So 20.544 million, and that follows 20.606 million, which was the revision, and that, of course, is a bit lower than the original number, which was a bit over 20,900,000. So these are still very large numbers, but we are moving in the right direction on initial and on continuing claims. It is lower also, but not by very much. Philly Fed, a June number, 27.5, a positive number. And in the rearview mirror is minus 43.1. That was, of course, May. The worst number is minus 57.9 in 1974. We never challenged that. So this is a positive number. The last positive number we had was February, and that was 36.7. So not bad on Philly, not bad on initial claims. Of course, we'd like to see those jobs, of course, reverse themselves completely and see numbers like we used to get. How's the response in the marketplace? Well, if we look at yields, right now we're at 70 basis points, about where it was, which was minus 4 basis points from yesterday, but it is unchanged on the week. We closed at 70 basis points last week as well. And many of the stories out there, of course, whether it was Delta or the coronavirus in general, that seems to be some of the sticking points, of course, as we work our way through this week. Joe, back to you.
All right, Rick, thanks a lot. And in the rundown, Steve, which I watch as I go along, I told you this is when I see it. It says intro Liesman / data, and a quick glance at it, it says intro to me. Leasmania. So that's immediately what I saw again. You see in the rundown, you see how it looks like Leasmania? And it's appropriate because the lease maniacs are waiting to hear what you have to say with the data.
They are, Joe, and I have to see these claims numbers as a disappointment, raising some questions. What we're waiting for is for something in the claims data to confirm what we saw in the payroll data, that somehow the jobs market is stronger than has been indicated by the claims data. Rick is right, technically right, I would say, and no insult to Rick on this. Claims are down, but only by a little bit, and the rate of improvement has slowed rather sharply. And I'm looking here at a claims increase in Arizona, and it's too soon to say if that's related to the rise in cases in Arizona. I'm trying to see where else there's a rise, another rise in Maryland, another big jump there. Nevada, hope I said that right, also up again. Ohio up as well. So it's a little hard to see exactly what's going on and create a pattern here. The highest unemployment rates remain in Nevada, Puerto Rico, Hawaii, New York, and Michigan. Those are uninsured unemployment rates. Now, I just want to turn first time here to look at the Philly Fed numbers here, and Rick is right. That is a big surprise, and that suggests maybe a manufacturing turnaround faster than we thought, and that could be good news. I don't have the Philly Fed data, so I'm just going to give you a pass on that and say that's good news, but I sure would like to see this claims data, Joe, improving more quickly and begin to back up what we saw in the jobs data. I will tell you that tomorrow I'm going to talk about a piece of data that maybe did predict the jobs number. It's this home-based stuff. It has also stopped improving. So, and as I quoted Ian Shepardson in the earlier hour there, that forecasting what's going on in the job markets with reopenings, maybe some renewed closings, these second wave has become very, very difficult to understand precisely what's going on, certainly on a real-time basis.